Well, thanks for tuning in to this earnings conversation with Sandeep Kalra of Persistent Systems. They've come out yet again with a fabulous quarter on a fairly high base, I would say. They are consistently delivering quarter after quarter, and pretty straightforward metrics because the revenue growth matches the bottom line growth, the margin performance stays stable. Maybe one or two chinks in the terms of higher attrition, but let's pose all of those questions to Sandeep. He joins us right now on the show. Sandeep, great having you. Thanks for joining in, and congrats on a great quarter.
Thank you, Neeraj. It's good to be with you once again. I hope you and your viewers are keeping safe and healthy.
Yeah, touch wood. So far, so good. Sandeep, put the quarter into perspective. It's a quarter that is marked by a number of things, including, as a lot of your peer CEOs tell me, leaves, furloughs, holidays across both the Indian and the US calendar. Yet you've delivered what you have. What went right this time?
Right. So let me give you a summary of the quarter, and then we'll dwell into the questions. So this quarter revenue came in at 199.12 million, that bit shy of $200 million, giving us a growth of 9.2% quarter on quarter, 36.2% year on year. This is in dollar terms. In rupee terms, it is basically 10.4% quarter on quarter, 38.7% year on year. Now, please keep in mind, we did two acquisitions. The two acquisitions closed in this quarter. So adjusting for that, the sequential organic growth is 6.7% and 33.4% quarter on quarter and year on year basis. Right. So now this is, as you rightly said, this is the third quarter of 9% plus sequential growth. So the earlier two quarters have been on organic basis 9% plus. So it's been pretty good last three quarters for us. The EBIT also, came in at 10 basis points higher, so roughly at about 14%. We declared an interim dividend. So our investors should know there's an interim dividend of 20 rupees, and which is basically equal to the entire dividend that we declared last year. And this is because the profits for the first three quarters for us exceed the profits for the full year for last year. So from that perspective, it's been a good going, both revenue growth and profit growth. In terms of total contract value as well, we did $334 million. So that also bodes well for the future. So I'll take a pause. I can give more color, but I'll let you ask the questions.
Thanks, Sandeep. No, so actually, just following up on that, you spoke about the deal wins. Let's start with that. The TCV looks impressive. I was looking at your release, and I think it's come across all of your segments, be it healthcare, be it software high tech, or BFSI as well, if I'm not wrong. Give us some color on that.
So overall, the deal wins are $334.3 million. TCV, the annual component portion is $291.3 million. So this is basically, across the next 12-month realizable revenue from these. Now, all the sectors, as you rightly said, panned out very well for us, whether it is, the banking, financial services, healthcare, life sciences, and the tech company. So I wouldn't want to, go into each one of them and give the details, but it's a secular growth all across. The bookings are also reflecting all across. And the things that are panning out well for us is on the enterprise side, and we've said this before. So we participate in digital transformation, the cloud transformation journeys of our customers, and so on. And on the other side, the tech companies, we basically participate in the product development side. So if you look at any of the forecasts from Morgan Stanley or Gartner, etc., this year, 2022 calendar, we are supposed to be having between 4.6 to 5% plus growth in IT services based on the spend that they are seeing. And for companies like us, there's another element that is driving the growth, which is private equity investments into product companies to accelerate their roadmap. And that product or platform is then used by the enterprise. So very healthy order wins across all the segments and good pipeline across.
Sandeep, based on the numbers that I see, sorry, I'm just tempted to slip this in. Based on the numbers that I've seen, annualized revenue run rate based on 3Q is a sort nearly 800 million. You want to make changes to the timelines for the $1 billion revenue targets as well in any fashion, or exceed that or something like that?
So look, our job is to build a company for the longer run and keep delivering.
I know.
You can do the maths, and hopefully, so we had said by FY24, hopefully in the next, anywhere between 4 to 6 quarters, we should hit there.
Yeah. Okay. Fair call. Just talk about attrition, Sandeep. That was the one thing that I wanted to ask you about, which I spoke in my trade setup as well. Everything looks good, but despite you having this wonderful piece for your employees, wherein last quarter you told me that 80% of your employees, if I'm not wrong, are now eligible for the ESOP structure. The attrition is still 26%, which is probably the highest end of almost any of the companies that have spoken to thus far. What's happening there?
So two things. Yeah, it is at the higher end, and the peers that you speak to, a number of them are across various services, whereas we are specialized in product development and the digital transformation side. So if you were to dissect the data for any of our peers, you will find the attrition is not in the support business, the infrastructure business, where people have thousands and thousands of or legacy applications and so on. The attrition even for our peers would be more on the front end of the digital transformation, or skills, whether they are cloud based, data, Salesforce, like those. These are the hotter skills in the market, and fortunately we are there, and that also has a repercussion on that issue. Having said that, and you're right, we did 80% employees coverage in the stock options. That's also going to have a benefit, and it's not something that will happen in one quarter, because these stocks will appreciate as things happen. As we do more revenues, the earning per share increases, multiples remaining the same, the valuation for our stock goes wherever it goes, so the employees tend to gain. So it's a longer term thing that will put things in perspective. Now, having said that, if you look at the attrition, when you look at TTM is one thing to look at versus what is the incremental attrition that is happening now, because the attrition has been going up like this. So if you take chunks of TTM, you will tend to see it higher for everyone for the next 1 to 2 quarters. But I do believe there's some amount of green shoots in the industry, and us as a company, I would tend to believe there's stability that we can see in attrition in the next 1 to 2, max 3 quarters. It should stabilize. For the industry, everyone is talking about bringing freshers. As more and more freshers come in, it expands the supply. It reduces the pressure where people are like stealing people from each other. And on the other side, people like us, we are also hiring freshers. We are also strengthening our employee value proposition. Doing 80% ESOP was one part. There are many other things we are doing. So hopefully all of this will come in perspective as we go along. So I'm bullish on this. And the good part, I've said this before, I would rather take this scenario where there's a huge amount of demand than a scenario where there's no demand and like everyone is like sitting looking around.
No, I take on board your point that it is actually the better of the two problems to have. But just because the number had peaked up so high, I thought it was pertinent to check with you that despite some of the efforts that you've done, why is it that the number so high? But thanks for that explanation. Sandeep, one quick follow-up. Trees don't grow to the sky. Your run rates have been so strong in the last few quarters. At some point of time, you might have to take a breather of some sort, right? I'm just trying to understand if you reckon in your vision that does the breather or the stop, or for temporary as it may be, come sooner, or do you reckon it could be back-ended, depending on the visibility that you have?
Look, we are here in the business for the longer run, and we will deliver to the best of our capabilities. We don't time these things. We deliver to the best of our capabilities on an ongoing basis. We invest in building capabilities for the longer run. We invest in doing acquisitions and building our next generation, whether it is 1 year, 2 year, 3 year out, and so on. So as far as we are concerned, we are at it. Some quarters may be lower, some quarters may be higher.
Sure.
So I am not going to give you a color that next quarter will be this, day after next quarter will be that. But overall, if you look at it, look at us as a company that will grow very healthily for the longer term. Yeah. And yes, to your point, there may be quarters, there may be quarters where we will have a slightly lower growth, and there will be quarters where we'll have a good growth.
No, sorry, let me rephrase my question if I can. What I was just meaning to ask you was that based on the conversations that you have with your clients and your team has with your clients, and you get that assessment, do you think that the pace, I mean, I'm not talking about this 2-3% here and there, but do you think the pace hits a bit of a roadblock in the immediate term, or the near term seems sorted based on the conversations you have?
Near term seems solid. As long as the macroeconomic environment, nothing changes. In the macroeconomic environment, everything remaining the same, nothing coming from the left field like a COVID wave 2, wave 3 is still controllable. It's like, it's not been that, worse for a lot of people, and vaccinations, boosters, etc. are there. Unless and until something like that comes, I think for the near foreseeable future, for us and the overall industry, the demand is good. And now within that, we have to execute. We have to overcome these supply constraints, etc. So there is no breather like, for the industry coming or for us coming very, very soon. There'll be healthy growth, and I think anything more than 3 to 5% growth is anyways very healthy.
Of course. Okay. One final question, Sandeep. Maybe a few years ago, services were maybe transactional in nature, and every point of time, BFSI hit a bit of a bump. There used to be some bit of a pullback in IT services businesses from that space. This year, 2022, will be the first in many when BFSI will have to contend with steep rate hikes from the US, arguably the rest of the world, inflation peaking, etc., or rather moving up, etc. Do you reckon that could have some bit of an impact on that vertical and the NA region, or nothing of that sort?
So look, there are multiple dynamics at play. One is the set of things you talked about. The second set of things is a lot of investment that used to earlier go in the physical world is being diverted to the technology.
Right.
So that should also, enable this to be a multi-year kind of a thing, because most of these programs have a longer span. So I would tend to believe small amount of up and down may happen, but overall, I think we should be able to smoothen this out and we should be able to ride the wave. And there are other verticals also that are growing very well. And so overall, the secular demand is good. So any small bumps here or there should not take us off the track.
Okay. I'm not asking you your margins because I presume you will say that you would maintain the band. Just one last thing, which I read in your release as well, that you're trying to strengthen a few pieces around which are not business necessarily, but the board, so to say. Can you talk a bit about that? Because it's unusual for me to see that mentioned in a release so upfront. Why is that so important?
No, so we are basically, it's not just the board or, it's basically as a company, just look at it this way. We have come from 471 million to 481, 481 to 501.6, 566. And, wherever we are headed, you can do the math for this. And maybe soon in the next, 4-6 quarters, we are trying to eye $1 billion. So if you are nearly doubling in 3 years, you need to make sure that, you're not just stopping at $1 billion. Our aspirations are beyond that. So the organization structure you put in place, whether it is in your exec team, whether it is on your board, whether it is in any part of the company, you are trying to make it so solid that it can take and stand the rigor of $1 billion and far beyond. So it's an ongoing journey for us. And some part of it will be done, laterally, organically. Some part of it you will also see through acquisitions. So that's where we are preparing for.
Very cool. Understand it's a busy day, but thank you so much for speaking to us today, and congratulations on a great quarter yet again.
Pleasure talking to you, and look forward to the next quarter.
Likewise. And viewers, thanks for tuning in.
Thank you.